Still with us is Ellen Zentner, chief U.S. economist at Morgan Stanley, who's at 3 hikes this year. What would it take to get you to 4?
So it would take inflation surprising to the upside, and particularly surprising to the upside of the Fed's expectation, because that continues to be the part of its forecast where it's encouraging right now. Inflation data seems to be coming in line with its forecast, right? But that doesn't mean you then move the goalpost because you're moving toward goal, right? Inflation data has to run ahead of what the Fed is expecting this year. And so that can certainly happen. If it does, we don't think that would emerge until closer to the middle of the year. So for me, from a strategic standpoint, why would I feel the need to pull on a 4th hike at this particular meeting? Why run the risk of overpromising and under-delivering like in 2015 and 2016? By June, I've at least got the first quarter of GDP. I don't even have that in hand going into this meeting. I don't have, but one true inflation print for this year in terms of core PCE. Why not just wait until there's a little bit more data? We think that they'll get close to signaling 4 hikes, right? You're going to see some upward movement in the dots, which should express the upside risks that Chair Powell spoke about at his testimony, right? But you don't need to get to that full median of 4. Never mind that it takes almost all of them to move from 3 hikes to 4 in order to drag that higher.
Ellen, you talk about what the Fed expects in terms of inflation. What about the rest of the world? What do consumers expect? What do businesses expect? Because the Fed really keys off of other people's expectations about inflation. Where is that now? Is it going up? Is it going down?
Yeah, so if you think about market-based inflation compensation measures, that has been rising and it's come off of the lows. What has started to help that rising was in January when we got the average hourly earnings report that showed that pop to 2.9% year over year on average hourly earnings. That sort of punched markets across the face and said, hey, inflation is going to rise this year. The Fed, though, has acknowledged that that's risen off the bottom, but remains near historical lows. So tempering some of that how they view that rise. For businesses and consumers, right now it's really all about tariffs. So going back to the trade that we were talking about on an earlier segment, in the latest University of Michigan's consumer sentiment report, some of those inflation measures, at least in the short run, did respond to tariffs. Now, that's not good inflation. That's bad inflation. So the Fed has to measure that as well. That's moving up, but for not the right reasons.